when trading platforms first started, it was web-based platforms that were very simple. All we could do on those things was execute orders. That's about it. Now, though, here's a screenshot of my firm's flagship trading platform, DT Pro. Now these trading platforms are software-based. You download them to your computer. They take up a lot of memory. They use a lot of horsepower. But they have all the bells and whistles you can ever need out of a trading platform. Probably more than we're all using in this room. But they have them. It's great. But not all trading platforms are created equal, right? If you have an account with an equity firm, maybe that's their main concern is the equities, and then they just kind of throw in the commodities on the side. So you're not really getting good commodity data from that trading platform. Some trading platforms don't offer options or future spreads. So my recommendation to you would be test out a trading platform before you open an account and use it. A lot of these firms offer trials, 2-week trials or month trials. So you can at least test it out. Make sure it's the right platform for you, that it fits your own trading needs if you want to use a trading platform. All right, so I got a shot here of Back to the Future. That's Doc and Marty McFly. Because now trading platforms are going back to the web-based. They're going back to web-based, but now they're utilizing the cloud, and they're going to have and they still have all of these features that the software downloadable version has. And then apropos of everything else, I've got a screenshot of the Cubs winning the World Series. The movie in 1989, they projected they said that the Cubs are going to win the World Series in 2015. So we're there. We're close. Yeah, so that might happen. And so maybe next year, the next trading seminar, I'll be on a hoverboard, right? Doing this on a hoverboard. So now trading platforms, they're web-based. They still have all the features. They're using the cloud. Here's a screenshot of our DT Pro on a smartphone and a tablet. They have apps now. You can download these platforms to the apps. One thing that's going to come up, and again, this is part of the shifting landscape, is now security, right? Hackers and just people trying to disrupt the markets. Now that everything's done, we're moving towards that web-based. Security's have to heighten. Things are going to change in the landscape of trading. There's going to be more security measures involved. I know a few folks asked me about Forex markets. Those are available on the DT Pro trading platform, so you can trade Forex, the Forex pairs right on the DT Pro trading platform, or even on the smartphones and tablets, and I think that's what that screenshot is there. I think that's a currency pair. So I mentioned this a couple times, depth of market, or DOM, as you may hear referred to. So what this is trying to do, and you can find this on most trading platforms these days, it's trying to simulate that ebb and flow of a marketplace, right? So it's the price ladder, moving up and down based on the last trading price. And these DOMs have valuable information. Not only do you get bids and offers, but you get the volume. You get the open interest at these certain levels. So you can actually look at a DOM and find support and resistance and use that for your trading. But technology does fail us, right? So here's a screenshot of July 8th, 2015, so just last month. The New York Stock Exchange halted trading, and they canceled out all working orders. Now, obviously, this is one event on a grand scale, but there can be 1,000 distinct issues that come across for any of us here. Me at the firm or you guys, at home trading. It can be no internet connection. It can be a rejected order. It can be bad data on the trading platform. A lot of things come up, right, with technology. Technology isn't foolproof at this point, or who knows if it ever will be. But again, that's going back to making sure you have a backup. Again, broker or just a trade desk or just somebody, tech support that you can call, just so you can get your questions answered or get your errors alleviated quickly, so that if you have a position in the market, time is of the essence. Another thing that happened, I want to mention the flash crash, May 2010, right? So that was in the S&P, market dropped, and actually it was the first initial reports that it was a trading error, right? A fat finger error. Those reports were erroneous, but that goes back to a mistype, and a big order that can happen in your account. What came out of that was a change in regulation. So the SEC came out and then changed the rule that if any stock on the S&P 500 trades above 10% in a session, they'll halt trading. So that's another thing that's going to change in this landscape now that we have electronic markets and all these different players in the market. Like I said, the market composition has changed. We're going to have new regulations along the way. So again, that's something that we'll all have to deal with as we move forward, just along with the new security measures.
The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure webpage accessed at www.danielstrading.com at the bottom of the homepage.